Hello my fellow freedom builders and welcome back to the channel. It is Friday the 8th of December 2023 and we just got the non-farm payrolls numbers out. I just want to give you a quick update. I think it's important when you're an investor that you understand some of the macroeconomics in the environment that you are investing into. I'll try to make it very brief so I won't bore you with a lot of stuff. But the non-farm payrolls are, as I say, the payrolls, a number of newly created jobs in non-farming. So last month that number was 150,000. The forecast was that this month there would be 180,000 newly created jobs, and this number was actually 199. That also sent the unemployment rate, and we'll get back to that in a second because that is the one called the U3 unemployment rate, that sent that down from 3.9 to just 3.7%, which is very low. And we'll get back to that as well in a second, but that will make the Fed more inclined to keep the interest rate higher for longer because, well, as long as the unemployment rate is not above 4%, they are fairly comfortable. As you can see, this is the official unemployment rate. We'll get back to the U6 unemployment rate just in a second because that also dropped but is actually at 7%, which is fairly high. So let's just have a quick look before we go into details with these. Let me just see here. The market dropped on the news, and that is of course because the market anticipated that the Fed might increase the rates or at least keep them higher for longer. So they dropped and now it is up again. There might have been a lot of orders down there ready to buy the dip. Yeah, let's see how that pans out when the market opens in around 45 minutes. So right now it is fairly positive. And if we are looking at the interest rates, now in this chart, you might have seen it before, I have almost all the yields, this is not the bond prices, but the actual yields on the bonds. We can see up here we have the 1 month, 2 months, 6 months, so on. We have the 1 year, and then we have all the longer term bonds down here, 2 years up to 30 years, and this is the yield. Now, right now, or just before the non-farm payrolls got out, these lines were a bit all over the place, going sideways, a bit up, bit down. But the second the non-farm payrolls came out, they all tipped up. And that is simply a result of speculation in what will Fed do now. We have this, this is called the FOMC countdown. You can just Google that and you can see that the next Fed meeting is in 5 days and 5 hours. Now, what do we expect? Well, the market is pricing in a 97.5% probability of the rates just staying where they are. And I think that is what is going to happen. Then there is a slight chance that it will actually go up 0.25%. And if we look back here, that was 0% yesterday, it was 1.2%, and a month ago there was actually, the market was believing there was a 10% probability of the interest rates actually being hiked 25 basis points. But right now I think it will stay where it is. If we go out to March, and that is where most investors are talking about what will happen in March, we can see that there is right now a 50.6% probability of interest rates after that meeting still being where they are, and then there's roughly 50%, a bit less than that, a probability that the market will or that Fed will send the interest rates down. So that has dropped as well. That was a lot higher just a few days ago. All right, let's just have a quick look at these numbers. First of all, the non-farm payrolls numbers. It is easy to say, oh, that is good, 200,000 newly created jobs. And that is good. You should remember, as long as the number of newly created jobs per month is above 100,000 jobs, then they are actually adding to the group of people that are in job. Because some are losing their job, some are dying, some are whatever, disappearing from the job market, retiring and so on. So as long as more than 100,000 jobs are created every month, it will keep growing the amount of people that are actually in work. And well, it is interesting because in 11 months or so, United States are going to have their next presidential elections. And I bet you that there are some Republicans right now that are pretty annoyed that this number stays good, because they would love to say that Biden actually crashed the economy. And this is not to be political in any way, and I'm just sitting here in Denmark, so basically I shouldn't really care. But I do, because United States has such a huge impact on the world's economy. So what has actually happened with this Bidenomics, investing in infrastructure projects and so on, is that it seems to be working. Of course, it is adding debt, and we will have to see what happens with that. But here and now, it seems like the GDP is going up, the number of people in work is going up. And then, of course, you can ask, first of all, let's just have a look at this, because this tends to be revised. If we are looking at this one up here, that is from the Bureau of Labor Statistics, we can see the seasonality, this is the seasonality adjusted numbers, and we can see how they are revised. For instance, here in January 2023, the first number that came out was 517,000 newly created jobs. When that was revised the last time, that number had dropped 45,000 people, so it was only 472. Then in February, that number was revised down. This number was revised down, down, and the first time it was actually revised up was in July. And then we have seen a couple of revisions down again. Right now, the second revision of the October number is still 150,000, so we'll have to see if the 199,000 number stands. Another thing I will, of course, when we're looking at the non-farm payrolls, this is the number altogether. Then there is the government payroll, and there is manufacturing payroll. This is actually positive, and the non-farm payrolls private, so this is just the private companies, and they are actually this month accounting for the majority, the 75% of the actual number of jobs created is in the private businesses, and that is very important as well. Another thing is the unemployment rate. If you hear someone mentioning that the unemployment rate is roughly 4% or 3.7%, it is of course true, but you can calculate it in different ways. And when you're looking at, you can see here, these interactive charts compare three different measurements of unemployment. U3, that is the official unemployment rate. And that is basically taking everyone, you're excluding a lot of people from that statistic. People that haven't searched for a job for a number of weeks, I think it's 5 weeks or something like that. The people that have taken a couple of odd jobs, walking a dog or whatever for some hours per month, they are excluded from that. So there are a lot of critics saying that U3 numbers is really bogus. Then there is a U5 that includes discouraged workers, meaning people that haven't searched for a job for a while for some reason, and other marginally attached workers. And U6 numbers adds on those workers who are part-time purely for economic reasons, so they are going down in time for economic reasons. I like to look at the U6 numbers to get the best idea of where the economy is. And as you can see right now, this is the October number. The official number was 3.9%, but the unofficial, you could say, the U6 was actually up at, well, almost double. So that is important to remember, and it is absolutely the number. I of course look at this, but then I just scroll down and look at the U6 because I think that is more telling. So what can these numbers tell us? Well, the economy in the United States is fairly okay. There are a ton of problems. There's a debt. There's the rising debt payments. They have really a ton of problems over there. However, these numbers are not really showing us that catastrophic hard landing, the world is ending kind of collapse that many YouTubers would like you to see. there's no doubt that if I had named this video something like "The world is ending because of NFP numbers," I would get 10 times as many views. People just like clicking those pictures with atomic nuclear explosions and people going bankrupt and all that stuff. Mine are a bit more boring, but maybe also a bit more precise. Who knows? All right, so these numbers, what will they mean for the market? We are investors, so what does it mean? Right now, it doesn't mean too much. The market hasn't opened yet. I have a feeling that it will put a pressure on the market when we go into the evening here in Denmark, of course. If we try and have a look at the 1 hour chart, we can see when the news came out, and right now we are actually back almost at break even. And we can also have a quick look, if we are just having a quick look at the, I know we were normally saying the euro dollar, but I'll just turn it around, saying the dollar euro, because we can see here that the dollar is going up. Let's have a look at that in a 1 hour chart, maybe even a 15-minute chart here. We can see that just when the news came out, the dollar spiked up towards the euro, then went a bit further up, went down, and now we're actually moving up again. So that is something that indicates also interest rates going up, and I will suspect that the markets over Friday evening here could be pressured somewhat down. One of the reasons why I think that, I made a video in Danish the other day, and I'm also talking on a daily basis to my Danish subscribers about this, and that is we have the put call ratio and options, meaning if this is low, it means that not many option traders are buying put options, meaning they're not buying insurance. They don't think the market will drop. So when that gets too low, it means that the market is overconfident in that it will just keep going up. So I made a Danish video the other day saying I actually think this could indicate we are somewhere close to a top. Not meaning we should collapse the market, but just meaning that we will see some sort of correction. And as correction often needs a driver. So a driver could be something like a very high non-farm payroll number, because a lot of investors are a bit nervous out there and they might drop some stocks, take some profits back. But let's see, nothing is certain in the market, and I certainly can't predict exactly what is going to happen. I just wanted to give you a quick update on the non-farm payrolls, give you a bit of insight into the different numbers, and just remember that things can change quickly, and there can be revisions of these numbers. So, but I will try a couple of times per month to give you an update of what the numbers are and what they mean for your investments. That's all for now. Take care of yourself and your money out there. Have a very nice weekend when you get to that point, and I'll talk to you again shortly. Bye.